Okay, welcome to IAS 38 Intangible Assets. Very easy standard. Similar to intangible standard you have studied under other gaps. No major difference as such. And a very interesting standard also. There are so many types of intangible assets now a business uses. Say 40 years ago or 30 years ago, nobody would have visualized the value of intangible assets would have been so higher now. Now the amount that you pay for intangible asset is much more than the amount that you will pay for tangible asset. So globally, understanding the importance of intangible asset, they have introduced a separate standard on intangible asset. So like tangible asset, we are going to learn the recognition principle, measurement principle, subsequent measurement, impairment, derecognition, okay, amortization, disclosure principles. Do you know the name of 20 intangible assets? 20 you don't know. Okay, try. Computer software, patent, copyright, trademark, motion picture films, goodwill, license, import quotas, franchises, marketing rights, and many other rights. Telecasting right, broadcasting right, okay, music rights will come under brand. Have I written brand? No, brand. These all are examples of intangible assets. These are very valuable assets for the enterprise because these resources help the entity to generate huge amount of profit. Say for example, goodwill. If an entity has a high goodwill or brand, then it generates more revenue. Or copyrights and trademarks, patent rights, they generate huge amount of revenue for the entity. So therefore we need to have a proper system for accounting of intangible asset because they are very important. Wrong accounting may distort the financial position and financial performance. So start with paragraph number 1. What are intangible assets? So this standard gives you a very simple definition of intangible assets. Intangible assets are identifiable. First feature is it should be identifiable. We'll discuss in a minute. Non-monetary. Second feature, it should be non-monetary. Third is asset. And fourth feature is without physical substance. So first we'll understand the simple part of this definition. It does not have physical substance. You cannot see. You cannot touch. You can feel. Okay. You can feel the presence of intangible asset. But you can't actually have any physical existence of that intangible asset. Okay. Like for example, goodwill. You can feel the goodwill. If an entity is generating huge revenue, profit, some intangible factor is working in favor of that entity. Or for example, software. Can you see the software? No. It is hidden somewhere in that hardware. But so much of now work is done using only the softwares. Okay. So that is without physical substance. Then it must have all the attributes of an asset. An asset has following attributes. it is a resource controlled by the entity from which future economic benefit is generated and arises out of past event. Okay, so asset. Now what is non-monetary, which is not a monetary item? What is a monetary item? Where the amount to be received or paid is fixed or determinable. Amount to be received or paid is fixed or determinable. Non-monetary means the amount to be paid or received is not fixed or determinable, so its value will keep changing. So software value today is 10,000, but tomorrow it can be 11,000 or 9,000. Its value keeps changing. And what do you mean by identifiable? Identifiable means separable, and more specifically separable from goodwill. It should not be a part of goodwill. It should have its own identity. Like all of you have your own identity because you are separable. Separable from goodwill. Each of these terms we will discuss again in detail once we move ahead. Since intangible asset can be identified as a separate asset, appropriate accounting treatment is necessary. Okay. And now companies invest huge amount of money in intangibles like software or patents, trademark, copyrights. IAS 38, in the current standard, we are going to learn how to identify intangibles. Recognition criteria. When should we recognize? Then amortization method, disclosure, and other miscellaneous aspects like derecognition. Okay. Subsequent measurement criteria, subsequent cost that we incur, impairment. You will be happy to note that most of the accounting principles of this standard, most are similar to IAS 16. That is for tangible asset and this is for intangible asset. But otherwise most of the principles are same. Now we'll come to paragraph 2, long paragraph, scope paragraph, where the standard is applicable or not. So the scope paragraph says standard is applicable to all intangible asset except, means they have defined a long list of where it is not applicable. Other than that, all other intangible assets will be covered by this standard. So first is intangible assets that are within the scope of any another standard. So that list is printed below, point number A, B, C up to I. That time I will tell you which other standards cover intangible assets. So those will be covered by those standards only. Then financial asset as per IAS 32 will not be covered by this standard. Recognition and measurement of exploration and evaluation asset covered by IFRS 6, and expenditure on development and extraction of mineral, oil, natural gas and similar non-regenerative resources. Now what is the reason for not covering this on this under IAS 38? Even though there is no separate standard for this, the standard says, which I have not written, that some transactions are highly complex in nature and therefore they cannot be discussed under a general purpose standard, and therefore sometimes you have some specific industry guidance given by the accounting setting bodies. Okay, because not every entity or many entities will be involved in this item, expenditure on development and extraction. Just a handful of entities will be doing that, and then there is a separate industry specific guidance available. Now the next paragraph is, we have discussed if any other standard prescribes accounting treatment for a specific type of intangible asset, then we will follow that. For example, I will just read the name and number. Like IAS 2 deals with inventory. So those intangible which are held for sale in the ordinary course of business, IAS 2. Deferred tax asset, IAS 12. Leases of intangible asset, IFRS 16. Asset arising from employee benefit, IAS 19. Financial asset already mentioned above also, IAS 32. But there is a note here. The recognition and measurement of some financial assets are covered by IFRS 10, consolidated financial statement, IAS 27, separate financial statement, and IAS 28, investment in associates and joint ventures. Then goodwill acquired in a business combination, IFRS 3. Contract within the scope of IFRS 17. Insurance contract, non-current intangible asset classified as held for sale or included in a disposal group that is classified as held for sale, IFRS 5. An asset arising from contract with customers that are recognized in accordance with IFRS 15, revenue from contract with customers. And 2 or 3 important notes also I have written. Rights held by a lessee under a licensing agreement. Rights held by a lessee under licensing agreement for items such as motion picture films, video recordings, plays, manuscript, patents and copyrights are within the scope of this standard and are excluded from the scope of IFRS 16. Now first they are saying that lease agreements are covered by IFRS 16 exception, and then they are saying following items, even though they are leased under a licensing agreement, will be covered by this standard IAS 28 and are excluded from the scope of IFRS 16. Rights held by a lessee under licensing agreement for motion picture films like movies, video recordings, plays, manuscript, patents and copyrights will fall under this standard. This standard applies to other intangible assets used, for example computer software, and other expenditure incurred, for example startup cost in extractive industries or by the insurers. Now for example you are an extractive industry, standard is not applicable, it is mentioned in point number 4 above, but you are using a software in your business. Will that software be covered by the standard? Yes. What is exempted is expenditure on development and extraction of mineral oil. That expenditure accounting is exempted. The whole entity is not exempted. Okay. Similarly, if there is a startup cost by such enterprise, then that will be covered by this standard. An insurance company may use a software. Will this standard be applicable? Yes. It is not applicable to the contracts within the scope of IFRS 17. But for other intangible used by an insurance company, welcome to this standard. Okay. Now paragraph number 3. What are intangible assets? So an intangible asset means an asset which is identifiable, non-monetary asset and without physical substance. These examples I read at the beginning of the chapter today: computer, software, patent, copyright, trademark, etc., etc. This list is not exhaustive. Now there is a note of warning. For example, say a software is included in a compact disc CD, or now popularly it is used in pen drive. Okay, CD is having physical substance, pen drive has a physical substance. So will this software be treated as intangible asset or property, plant, equipment? You can see the pen drive, you can touch, you can take in your hand, you can put it in your pocket. Okay, suppose this software, one more software, is an integral part of the hardware. Like in a computer there is an operating system which is an integral part of the hardware. Then there are CNC machine, computer controlled machines. Okay, or your mobile phone. When you buy a mobile phone, there is a software which is an integral part of the hardware. Now my question is, how will you classify this computer? Will this computer be classified as PPE or intangible asset? PPE. Why? This time also this operating system is a software in that computer only. That is separable. This is not separable. Separable. So, okay, you suppose buy a tally software for accounting purpose. There is a accounting software called Tally, and you install it on your laptop or desktop. So what will be the classification of this? Intangible asset. Okay, so now I'm getting confused. Same software is given to me in a pen drive, or it is a part of a hardware, integral part, or it is an application software like Microsoft Office, Tally, and so many. So how to do the classification? Or suppose I got a trademark recently for our company, trademark, ES Foundation trademark. It was given on a piece of paper. Okay, I can see the piece of paper. So will this trademark for which we spent lakh of rupees is tangible or intangible? But you can see the paper, it is written this trademark belongs to AS Foundation. Intangible. So now judgment will be required in some cases. And the speed with which softwares are becoming more and more powerful, a time will come when a computer will be also called as a intangible asset, because you don't need now a storage in computer. You can upload on a cloud. Is it right? So a lot of things that are presently incorporated in a computer device probably may not be required only. So therefore judgment will be required. In my first example, this pen drive or CD, or in my last example, the paper on which this patent or trademark and copyrights were given, are immaterial value as compared to the value of the software. So in that case, those items will be treated as intangible asset. But in the other example of a computer controlled machine or an operating system which is an integral part of a computer or a laptop, in that case the standard says that will be treated as property, plant and equipment. Ideally, what they should have done, they should have divided the cost into two parts. They should have said this much I am paying for hardware, this much I am paying for software, and then you can do the two accounting. But can you go to iPhone store and say, I want iPhone, give me the two pricing, one for your software and one for your hardware? Not possible. Possible. At least try. Only give me software, I'll put it in the Lenovo mobile phone. And go to Lenovo company, only give me the hardware, I'll take care of the software. Not possible, because this is integral part of the related hardware. And the standard at present says it will be treated as property, plant and equipment. Therefore, the same applies to operating system also. When the software is not an integral part of the related hardware. I had given example of a Tally software. It is not integral part of the hardware. Your computer will work even if you don't use that software. Then in that case, it will be treated as intangible asset. So many companies nowadays use so many different types of software. Those are not integral part of the hardware. So in our office, suppose we use Corel Draw software, Photoshop software for making all these presentations. Okay, or Microsoft Office PowerPoint. These are all not integral part. Okay, and therefore they are capitalized as separate intangible asset. The definition of intangible assets is it must be non-monetary asset. So first we'll see what is an asset. Asset are resource controlled by an entity as a result of past event and from which future economic benefits are expected to flow to the entity. Although the definition looks simple, but many expenditure that the entity incur are not to be capitalized because it may fail the definition of asset itself. Like for example, controlled by an entity. A CA firm gives 3-year training to an article clerk. Will the training cost given to article clerk, the intern, be capitalized as intangible asset? Why? Because there is no control. Okay, the article may leave. The article may leave, and whatever expenditure you have incurred, you will not get the economic benefit of that. Okay. Similarly, training given to employees. Those question comes in the exam quite often. Training given to employees on a new GST software. Charge to P&L account. Unless you have some or the other means to control the benefit that you will derive from that employee. Okay, then you can. And similarly, research expenditure is charged to statement of profit and loss, because during research phase you cannot demonstrate that the expenditure will generate the future economic benefit. Okay. Advertisement expenditure, promotional expenditure, even though they may give future economic benefit, but control is not there. Customer cannot be controlled by the entity. You cannot check the loyalty of the customer. Not an intangible asset, because it is not an asset only. Earlier, when you were in probably schools, they used to teach deferred revenue expenditure. And teacher used to give this example: a company incurs huge sales promotion expenditure. It will benefit for 3 years. So company wants to defer it for 3 years, and every year they will write off some expenditure. You cannot do that. You cannot carry an expenditure in the balance sheet anymore unless it meets the definition of an asset or it is permitted by some standard. Otherwise not. So asset. Now we will go through some definitions. I will not read all those. I will read only those which are new to us. Many other definitions we have already read in IAS 16, like depreciable asset, depreciation, cost, okay, fair value, impairment loss. So those I will not read. You can read it later. So what do you mean by amortization? Amortization term is used for intangible asset. Is the systematic allocation of the depreciable amount of an intangible asset over its useful life. So see this term, systematic allocation. We have a separate paragraph on amortization. So we will see how to allocate the depreciable amount. So we have to see how we are going to generate future economic benefit from this asset. And we will follow the future economic benefit pattern. Okay. That is systematic allocation of depreciable amount, means cost minus residual value of an intangible asset over its useful life. Then in this standard we are going to talk about research and development. Treatment of research and development cost. Companies spend in today's competitive world to stay ahead billions of dollars in research and development. Then the question arises how to account for it. So development expenditure is the application of research finding or other knowledge to a plan or design for the production of new or substantially improved material, devices, production process, system or services before the start of the commercial production or use. So development phase is simply the next phase after the research phase. This is research phase. This is commercial production. This phase is called development phase. During research phase, you may get some findings. Okay, you may get some knowledge, but immediately it cannot be commercially produced on a mass scale or for the commercial purpose. So what you will do, you are going to do some more testing. Okay, this phase is called development phase. This standard says expenditure in the research phase, no choice, profit and loss, because future economic benefit cannot be demonstrated here. But development phase can be capitalized as intangible asset subject to conditions. Few conditions we will read later. And that is why there is a need to differentiate between research and development. And if you can't differentiate between research and development, then it will be treated as research only. So now the entity will have to make it very clear which expenditure is research and which is development. Now next is definition of impairment loss. Impairment loss means carrying amount exceeding the recoverable amount. Monetary assets. The standard uses the term non-monetary asset, but defines monetary asset are money held, means cash in hand, cash at bank, an asset to be received in fixed or determinable amount of money. Intangible assets are non-monetary asset, means they are neither money nor those assets which are received in fixed or determinable amount of money. The value of this intangible asset will change, okay, every day. And what is research? Is the original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. So that means this is the original activity. You have an idea, you want to see whether this idea will work or not. So that is research. And during research phase, if you think this idea is worth commercial exploitation, then you go for development phase. Is it right? So companies are involved in medical, medicines. They spend a lot of money on research to find out the new drugs. And in research phase, if some positive signs are there, then they do development. And if development phase is also positive, then they go for commercial use. Or automobile companies. You will see so many brands and varieties of automobile on the road. It doesn't come on its own. First they go to the research phase, then development phase, and if development phase is successful, then they go for commercial production. Last two definition quickly. Residual value of an intangible asset. A very interesting thing, intangible asset does not have a physical substance. It's not like a tangible asset. At the end you can sell it to someone else. It does not have a physical substance. So therefore finding residual value for intangible is near impossible task. But still, you may not use it up to its economic life. You may use it for some year and then sell it to others. So therefore it may have residual value also. Like you may have a software which you may use for 3 years and you can give it to other. You may have a brand, you can sell it to others. Is the estimated amount an entity would currently obtain from the disposal of the asset after deducting the estimated cost of disposal if the asset were already of the age and the condition expected at the end of its useful life. So residual value is the amount that you expect to get at the end of the useful life. It's an estimated figure, and which is a very difficult task practically speaking, unless there is a contract with some other party, or unless there is an active market for that intangible asset. What is useful life? Defined in two ways. One in terms of period and one in terms of number of production or similar units. So you buy AS Foundation pen drive software. All lectures are in a pen drive form, which is nothing but a software only. And you get 1 year or say 2000 hours validity. Once 2000 hours are over, pen drive will stop. That is production or similar units. So in case if you use 300 hours in 1 year, 300 by 2000 into your depreciable amount. That is how the depreciation will be charged. Now we'll come to the accounting aspect. When should you recognize an intangible asset? In the beginning, very first time. So very simple, two conditions must be fulfilled. What are the two conditions that must be fulfilled? First is it must meet the definition of an intangible asset. In intangible asset there were following factors. It should be identifiable, non-monetary, asset, and without physical substance. And then it should have all attribute of an asset: control, future economic benefit, resource, past event. And then it should meet the recognition criteria. Recognition criteria for assets are similar across the standard. It must generate future economic benefit and the cost can be measured reliably. What are the characteristics of an asset or intangible asset? Main characteristics are it must be identifiable, the entity should have control over the asset, and the asset must generate future economic benefit. Some question we are going to test on your understanding of this word identifiability. Is it right? How are you identified in your home? By your name. Imagine a world where people don't have a name. Features. Imagine everybody has same feature. Difficult to identify. So identifiable means it has its own identity in general terms. And how do you know you have your own identity? When you can be separated, or more specifically separable from goodwill. When we acquire a business, in a chapter called business combination, you have learned goodwill is the balancing figure, difference between consideration paid and net asset acquired is goodwill. But suppose when you acquire a business, you can identify this amount I have paid for brand, so allocate that much difference to brand. This amount I have paid for the customer list that I am acquiring, then that much consideration you allocate to customer list. This amount I am paying for the trademark, copyright, customer relationship, supplier relationship. Keep on capitalizing those assets if you can separate them, and then the balancing figure becomes the goodwill. So therefore they say in many definitions separable from goodwill. Now how do you know it is separable? Separable means it can be sold, exchanged or transferred. Sold, exchanged or transferred, rented, okay, on its own. Sold, exchanged, rented, transferred on its own. So this pen is separable. Can I sell it to you? Separable, identifiable, okay. Second, this is one. Second way to identify an intangible asset is, does it arise out of contractual or other legal rights? Okay. So if there is a contractual or legal rights, then the standard says it is identifiable. Like for example of contractual or legal rights, license to operate buses. So all licenses are contractual or legal, okay. They will be treated as intangible. License as such does not have a physical substance. License is a non-monetary asset, okay. It generates future economic benefit. Only those who have the license can operate the bus in a route, and it is arising out of contractual or legal rights. So therefore it is a separately identifiable asset. Second example, mining rights. Rights to mine coal, iron ore, gold is granted by the government to a mining company, which is separately identifiable as it arises from a legal right. So first test you have to pass, are you separately identifiable? Are you separable from goodwill? Can you be sold, rented, exchanged on its own? Or does it arise out of any contractual or legal rights? If yes, welcome, you have crossed the first hurdle, okay. Next is control. Control over the asset. The entity should have a control over the asset. How do you know the entity has a control over the asset? Who will enjoy the future economic benefit from that? That is the test. This is, suppose, my pen. It is my pen only. Who will enjoy the future economic benefit? I will enjoy. So you are also enjoying. How are you enjoying? I am writing. You are gaining knowledge, but we don't bother about knowledge in accounting. Everything has to be monetary value. Yes. And I can stop other from using it. You can't walk into the classroom and take this pen and start writing. Not allowed. Okay. We can restrict you from using that asset. Like for example, if you have a brand, okay, suppose you have a brand Kurkure. Can I start selling Kurkure? by packing the similar products inside that package? No, because that entity which have the rights over this brand, they can restrict me. Okay, can I use pirated software of Microsoft Office? Official answer is no. Is it right? Because the moment you use it, and if the Microsoft gets to know about it, they will go to the court and ask for damages that you have caused, and nowadays they charge lakhs of rupees in case if they find somebody is using their software. Okay. Enterprise should possess the control over the asset. How do you get the control? Simple test is legal right. Are you the legal owner of that? Like when you buy a notebook, you get an invoice which says that you are the owner of this notebook, so you have a legal right. When you buy a bike, okay, two-wheeler, don't you get the invoice in your name? That is your legal right. When you go to the patent office, get the product, process, design patented, it's a legal right. It's mentioned that this patent right or copyright or trademark is given to this entity for these many years. Is it right? And if in case others are found using it, you can restrict them. Others can use it with your permission only. Okay, and you normally charge royalty from others if they use your intangible asset like brand or trademark. Intangible asset can also arise if you have technical knowledge or patent or agreements. Okay, like rights or through agreements. These are the way you acquire the control. And if control is not there over the asset, that means you will not get the future economic benefit from that asset, or you cannot restrict other from using that future economic benefit, then you don't have control. Like your employee training cost is not capitalized because control is missing. There is no assurance that you will get future economic benefit, and you can restrict other from enjoying those future economic benefit. So quickly answer few questions on this identifiability and control. A patent right gives production right of a specified drug to a company, which gives it future economic benefit, and also nobody else can use the said formula to launch a new product. Now this is an example where the entity has a control. They will get future economic benefit and others can't use the said formula to launch a new product. But what about the market share? Is market share an intangible asset? Reliance Jio says we have 30% market share of telecom industry, and therefore we want to capitalize it. It's a big customer traction number, okay, that we are market leader in this business. Can we capitalize it? 30% of the country's customer use your services. Still the answer is no. This cannot be capitalized as intangible asset. Even though it is a resource, it is valuable, it is going to give benefit to the enterprise, but control is lacking. So therefore it cannot be capitalized. What about training to the staff? Same reason. Training to staff is not controlled by the enterprise. After receiving the training, what that employee will do? He can leave. He may not leave, but he can leave. And therefore there is no assurance about future economic benefit. There is no way you can control others from enjoying the future economic benefit, unless you put some kind of control over that. Is it right? Like you will say that you cannot quit for 4 years, or you have to pay double the amount we have spent on training you, etc. That means then you are using some technique to control the amount of money that you spent on that. Same logic for specific management and technical talent. They are useful resource for the company, but company does not have the power of over the employee to force him to stay with the entity. Not controlled, not an intangible asset as per this standard. In the exam, you have to say that unless the company has devised some or the other way to control the future economic benefit and also restrict others from using that future economic benefit, till that time all this training, management, talent, etc. is not an intangible asset. And the same reason customer portfolio also. Customer list, customer portfolio which you have generated in-house is not intangible asset, because there is no legal way to protect or other ways to control the customer loyalty. But yes, nowadays companies, when they acquire another company, Walmart has acquired Flipkart and they got the database of 30 crore customers, for example, they can capitalize it because for them it is a valuable resource. Is it right? So nowadays companies spend a lot of money in acquiring the database of customer, supplier, user, subscriber. That is where a lot of money goes. But it should meet the entire definition of intangible asset. It should fulfill the recognition criteria. Otherwise, it may be forming part of goodwill. In case if you can demonstrate definition criteria and recognition, capitalize it. So items like brand, customer list, okay, subscriber list, database are valuable resource now, and companies have started capitalizing them. Now we'll take a break.